T.Rowe Price is trading now for under $100, offering a yield of over 5% and right there at the 52-week low. It is one I hold in my portfolio, and I'm going to also discuss in today's episode not only if it is a buy or sell, but also my own strategy for this company. We're going to take a look at the historical performance of T.Rowe Price Group. We're going to jump into their income statement, their performances on the top line, bottom line growth year on year. We're going to take a look at the balance sheet, a quick health check, total cash versus total debt. We're also going to see how they've performed against some of their competitors' total return over the last 5 years. And we're also going to see what are the institutions doing. Are they buying or selling T.Rowe Price? This will lead us nicely into that all-important dividend safety score. And we're going to, as always, run it through that stock valuation model to get to our intrinsic value, our acceptable buy price given that margin of safety. Now, it is down around 11% year to date. As I mentioned, it is offering a yield of just over 5%, right there at the 52-week low. Now, shareholders who have been holding the company over the last 10 years would have seen growth of around 34%. And even though that doesn't include those dividends reinvested, it is a fairly poor return for any form of investment. So today, let's see, is this a very cheap price now? Can we expect to see the price double, triple over the next few years, as well as that yield on cost in double digits? And we can see not long ago, around 2 years, in fact, it was trading for over $200. So let's take a deep dive into T.Rowe Price. So top line, what we like to see, 3 to 7% growth year on year. In December 2018, 5.4 billion reported on the top line. December 2022, their latest annual report, around 6.5 billion. So we can see there's been some nice growth over the last 5 years, but on a more granular level, what we see is from 2018 all the way to 2021, it had some very nice growth. And then in fact, it did fall, as we can see, from 21 to 22. So it has been a tough year, especially with the macroeconomic conditions, which does affect T.Rowe Price. But how does that also compare to the bottom line net income? Well, 1.8 billion reported net income 2018. December 2022, 1.5 billion. So we can also see the net income has been affected over the last 5 years. And again, a more granular level does show a better story, an increase from 2018 to 2021. But we see, like the top line, the bottom line has also dropped from 21 to 22. So we can take a deeper dive into the reasons for that as well. Now focusing on their balance sheet, total cash versus total debt. They held around 1.4 billion in cash in 2018, and we can see latest quarterly report around 2.2 billion. So they are holding more cash than they did over the last 5 years. Numerically and directionally, well, how does that compare to the total debt? Well, total debt, what we can see, they actually had no debt in 2018. Very nice to see. And again, wow, I mean, their latest quarterly report, only 423 million in total debt. Now compare that to their total cash. They are holding a significant amount more cash than they are total debt. A very, very strong green flag in my opinion. Now, how do they perform in essence against some of their competitors? Well, we have companies that are asset management and custody banks, State Street Corporation, STT, Owl, Blue Owl Capital, and a few others just to note. So year to date total return, what we can see in fact is T.Rowe has been roughly in the middle of its competitors, down 8% total return. So that includes those dividends reinvested. And in terms of a 5-year analysis, well, how does T.Rowe compare to its competitors? What we can see here when we take a look is that we can see for the last 5 years, total return around 16%, again in the middle of their competitors. Now, this isn't the greatest performance for any return on investment in 5 years, but always remember, previous historic performance is not indicative of future, but it's always good as one piece of the puzzle when analyzing stocks. So now let's see, what are the institutions doing? Are they buying? Are they selling? Straight away, 76% of institutions do hold T.Rowe Price. Now, just shy of 2 billion shares have been sold by these institutions over the last 12 months, but more than double have been bought, around 4 billion inflow from institutions over the last 12 months. And if we look from 2022, we can see the trend where more shares, and for those that don't know, Green depicts buying, red depicts selling. More shares have been bought every single quarter over the last few years. So institutions are really liking T.Rowe. They are looking to buy rather than sell. But do remember, just because institutions are buying, it doesn't mean necessarily that you should buy too. Always do your own due diligence. Straight away, dividend safety score 80, making it safe. Yield of just over 5% and a market cap of around 22 billion, making it a large cap company. Now, how did they perform in the last recession for those investors who are a bit shaky and they believe a recession is just around the corner? Well, last recession, they did increase the dividend 0709. They did have negative 24% sales, but bear in mind this was the average growth of companies in the S&P 500 from this period. But they did underperform the S&P 500, which was down 55%, whereas as we can see, T.Rowe was down 63%. So just a bit there to digest for investors that see a recession looming. They have been paying dividends increasing year on year for the last 36 years, so they are a dividend aristocrat, as that is more than 25 years. And we can see last 5 years, compounded annual growth, double digit 16%, last 20 years 14%, very strong to see. Very disappointing then that we got a 1.7% increase in February 23, but given their performance in 2022, it is understandable to see why they have dropped that. So just for the new investors that don't know this, what we always say is you want to aim for a minimum of 4% increases year on year, whether it's your dividend, salary or other income producing assets, as the US inflation rate over the last 40 years was 4%. Anything less, you are taking a pay cut and losing your purchasing power. Now, dividend yield theory states that the company is undervalued when the current yield sits above the 5-year average. So we see here 5.01% versus 2.91, our first sign of undervaluation. Do bear in mind though that we don't look at any of these models in isolation and we'll draw our conclusions towards the end of the episode. Likewise here, forward PE 14 versus the 5-year average of 15, another sign of undervaluation. And we can see the sector PE slightly lower at 9.5 than that of T.Rowe Price. Now at the beginning of the episode, whilst I did mention it is at the 52-week low, do bear in mind 52-week low does not signal undervaluation. Likewise, 52-week high does not signal overvaluation. Now, in terms of earnings versus free cash flow, we do tend to ignore the earnings. It is susceptible to manipulation by management through accounting. And if you've seen a regular episode, you understand why, given what we've essentially gone through in the examples. So free cash flow below 60% is personally what I like to see. It gives me faith that management have the ability to offer those double-digit increases. And from 2018 to around 2020, it's been below 60% consistently. 2022, 51%, with 2023 expected 52%. So it gives me faith so far from what we've seen that dividend is safe, and we should expect to see some nicer increases than what we saw at the beginning of the year. Earnings per share then, again, this is typical. We don't tend to look at this information, but it is there for investors who want to analyze. Draw your attention to the free cash flow per share, 436 in 2013, 939 in 2022. As you can see, it is moving in the right direction with 2023 at 945, but it is fairly inconsistent, as we can see some years of very small free cash flow generators. So bear that in mind, that you understand the business you are essentially investing in. Sales growth, we love it. 3 to 7% year on year, and up to 2021, it was very, very strong for the growth. But we can see again 2022, as we analyze in the income statement, their revenue top line did drop. How does that essentially translate numerically? Well, 3.5 billion on the top line in 2013, 6.5 billion in 2022. So nearly double the top line growth over the last 10 years. Positive to see, especially if the trend continues. Now, yes, we love it as investors when companies do share buybacks, returning excess cash to our pockets. 266 million in 2013, 227 in 2022. Not massive amounts of share buybacks, but they are buying small amounts every now and then. So I guess it is more of a positive than a negative. Now, ROIC, return on invested capital, one of my 7 golden dividend metrics. If you do want to see the other 6, do check the pinned YouTube video. Personally, 10% plus is what I like to see. For asset management companies, we can look for more, around 25%. And we can see with T.Rowe, they've consistently been at 25% or more year on year. Gives me a lot of faith in management and the ability to essentially efficiently allocate their capital. Now, in terms of operating margin and free cash flow margin, again, very, very strong, very high numbers for the operating margin, above the 25% we look for. Again, higher the operating margin, the higher that bottom line net income should be, which means more dividends paid out and higher growth year on year. Free cash flow, again, very, very strong. Other than 2016 and 2017, it has been above that 20%, so that is very positive. Now, probably one of my most favorite metrics for T.Rowe Price, the net debt to earnings before interest, tax, depreciation, amortization, signaling the number of years it would take the company to pay off all of their debt net of cash on hand. As we saw, if they wanted to pay off all of their debt today, at any time they could. There is not much debt that they do hold, and they have a far superior amount of cash. Very, very positive in my opinion. And on the right, purely showing the percentage of a company's financing from debt as opposed to equity, which is fairly obvious given their very minimal debt levels. As always, if you do enjoy the content, value is being provided, smash the like button, hit the subscribe and bell button if you want to be continually notified of these videos as they drop to your doorstep. And if you want to grab a copy of the valuation model to get your own intrinsic value of companies in your own portfolio to get your own acceptable buy price, do click on the pinned comment below and grab a copy. Now, Graham's valuation is one that we would typically use. However, given this is an asset management company, as we saw, this isn't really relevant. So we will be removing this from our final intrinsic calculation. But as always, for those that are new and want to see how it works, we do have the stock ticker, the earnings per share, growth rate per analyst estimates, and that current yield on AAA corporate bonds, giving an intrinsic value based on this at $53. But as mentioned, it isn't relevant for asset management companies. So then we move on to the first model. We're using the multiples valuation. Companies in a similar sector and size, Northern Trust Corp, Ameriprise Financial, and Franklin Resources. We have their stock price, earnings per share, PE multiples. Get the average, multiply that by the earnings per share of T.Rowe to get a stock price of $90.19. Now, when we compare that to the current trading price, it is slightly lower than the current trading price, below the 52-week low, given that is the price today, and therefore showing some small signs of overvaluation. We then move on to the second model that we're using, the dividend discount model, where we have the yearly dividends, as we can see year on year. Some very nice growth rate over the period, around 12%, as we can see. Now, forward looking, I have estimated around 4%, which is essentially in line with inflation. Now, you could argue you'd want to go higher given the average is 12%. You could argue you want to go lower given the recent raise of 1.7%. Depending on whatever your investment thesis is, if you do want to play around with the percentages, do grab a copy of the valuation model below and run your own figures through, whether it's for the DDM or for other companies. However, based on the estimates and judgments today, this is giving a DDM price of $127. Just below the 52-week high, showing signs of undervaluation in the current market. We then move on to the third and final model, the DCF model, discounted cash flow model, where we have our free cash flows year on year. Average growth rate 374%, with analysts estimating between 2 to 4% forward looking. We have gone a bit more conservative. With the discount rate, we get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, and arrive at the equity value. Divide that by the shares outstanding gives a DCF price of $169, higher than the 52-week high, higher than the current trading price, showing signs of severe undervaluation in the current market. So the intrinsic value is the average of the models we have just run through. And again, if you do enjoy the content, value is being provided. Smash the like button, hit the subscribe and bell if you haven't already to join this lovely community. So the essential current price is $97.37. Now, margin of safety, I would say 10% if you believe it has a wide moat, strong financial metrics, good forward-looking data. But again, for T.Rowe Price, you could argue you want a higher margin of safety. So you could look at around 15%, which would mean a buy up to $109. 20% would mean a buy up to $103. 25% again around $96. Now, personally, I believe you could justify around 20 to 25%. And based on this, my own strategy has been, whilst I do hold a small percent of the portfolio in T.Rowe Price, I have started to add at these levels at around $97 to $98. As always, though, do let me know your thoughts in the comments below. Are you looking to add T.Rowe Price, looking to sell, or purely on the sidelines speculating? Now, Wall Street do believe the price to go up to around $101, so they are a lot more bearish on T.Rowe Price than our intrinsic value that we've calculated. However, as I always say, whether it's Wall Street's forecast or institutions, you have to do your own due diligence when you are buying or selling a stock. But again, that is essentially what we have calculated, the intrinsic value versus Wall Street's price. So do let me know your thoughts in the comments below. As always, if you do want to grab a copy to run your own figures through, whether it's for T.Rowe or companies in your own portfolio to get your own intrinsic value and acceptable buy price, do click on the pinned comment below and grab a copy. And if you do want to jump and join us on the Discord where we are talking all things buys, sells, stock market and finance related, do click on the Patreon link below. As always, have a great day. Do hit that like button if you enjoyed today's episode. Catch you on the next one and take care.